Good day, ladies and gentlemen. Welcome to the Northern Dynasty Minerals presentation on the Pebble Project. My name is Ron Thiessen, and I'm the CEO of Northern Dynasty. Here's the forward-looking statement, cautionary. This is what I'm going to focus on today. The scale of the Pebble resource. It's a world-class resource. How we right-size and de-risk the project for permitting, and the outcome of that permitting, and then the unique investment opportunity. 4 key elements. They say a picture's worth 1,000 words, and here's a picture of the valley that Pebble sits in. It's not your typical Alaskan scene. There's no glaciers, there's no waterfalls, no icebergs, and no mountains. It's a flat terrain. It was eroded by the glaciers 10,000 years ago. The elevation is about 750 to 1,000 feet above sea level. Ideal location for mining operation, and it's not Arctic conditions. It's a cool, temperate climate. It's a large resource, about 10 billion tons in total. It includes measured, indicated, and inferred. Well, that's not 43-101 compliant calculation. 6.5 billion tons, or 55% in measured, indicated category. Truly a polymetallic. Copper, gold, moly, silver, and rhenium resources, all in scale. That just sets us up for the next slide, which tells us, approximately what this project will be like. Once in production, it'll be the 3rd largest copper mine in the United States, and it will be the 4th largest gold mine. It will produce, over a 20-year period, about 613,000 tons of copper gold concentrate, containing about 320 million pounds of copper and 360,000 ounces of gold, as well as 1.8 million ounces of silver. We'll produce a moly concentrate, about 15,000 tons a year, containing 14 million pounds of molybdenum, and most importantly, 12,000 kilos or 26,000 pounds of the critical mineral rhenium, critical to the defense and space agencies. Significant new gold discoveries and copper discoveries are hard to come by in the world today, and so that's why projects like Pebble are extremely important. In terms of right-sizing the project, what we did is we took a view of a 20-year mine life, focused on the west end of the deposit, mining rate of about 70,000 tons per annum, or 1.3 billion over the 20-year mine life. 180,000 ton per day processing plant. Well, the processing plant isn't small, as you can see by the amount of production that we have. It's a very standard, typical porphyry operation. It's a shovel and truck mining operation and a crush, grind, flotation, produce a concentrate type of operation. The waste-ore ratio in the first 20 years is 0.1 to 1, so extremely low-cost mining. Very clean concentrates, no deleterious items, no penalties. You'll see in the slide, if we get it, the infrastructure. We're about 85 miles from the port facilities on Cook Inlet. That has to be built. There'll be a road, concentrate pipeline, diesel pipeline, natural gas pipeline, and a natural gas-fired cogen plant at the site for about 270 megawatts. To run the electrical facilities at the site, plus share power with those villages that are on the lake. In terms of the permitting process, it was almost a 3-year process, culminating in a final EIS that was filed on the Federal Registry in Washington, D.C., January 24th of this past year. There were 4 critical findings of that FEIS. One is that we would have no impact on subsistence fisheries or wildlife or hunting resources. Second, that we would have no measurable impact or change to the commercial fishery in Bristol Bay, that's sockeye salmon, and the relationship between vessel value or ex-vessel value and wholesale values would be maintained. In addition, we wouldn't have any impact on water quality in the region, because our plan is to treat all discharge waters through water treatment plants. Probably one of the most important findings, however, is that the socioeconomic impacts for the region are extremely positive. It's one of the poorest regions in all of the United States. It's about 40,000 square miles, the size of the state of Ohio. Total population of about 7,500 people, 90% of which live on the coast. Those communities are well over 100 miles away from the Pebble Project, up to 500 miles away. And within, say, 500 square miles of Pebble, the communities are about 500 people in 5 or 6 different communities. Closest communities of Iliamna and Non-Dalton are about 20 miles from the project site. So nobody to move, and not a lot of people impact, but a lot of job opportunities, both at the mine site, infrastructure, services, etc. Great for the region, great for the state of Alaska. Benefits overall from that socioeconomic, well, obviously a lot of jobs, almost 1,000 jobs at the mine site. The average wage in Alaska is about $100,000 per year in the mining sector. 2,000 jobs in indirect services. In terms of our operating budgets, well over $400 million to be spent a year on supplies and services in Alaska. Well over $100 million a year in salaries and wages. We've got state royalties and taxes, well over $1 billion over 20 years, or $50–60 million a year to the state of Alaska, which has got running a structural deficit these days and needs the funding. The Lake and Penn Borough, the taxing jurisdiction that we're in, that encompasses 90% of that 40,000 square miles out in Western Alaska, they'll get a disturbance tax or a property tax of about $20 million a year. Their current annual budgets run about $4.5–5 million, so that's a 4- to 5-fold increase in their annual revenues over a 20-year period. That'll be about $400 million. This is all going to help the diversity in the region. The cost of living in the region will bring it down well. It'll introduce a lot of cash into the economy out there and abate or stop the decreasing population of migration of individuals and school closures. In addition, presidential order here recently, about a month ago, the White House issued an order on critical minerals and the need to expedite the development of those. And obviously rhenium, copper, and silver all play into that for the greening and the electrification of the United States. The U.S. depends on foreign imports for many of its critical minerals. It imports 35% of its copper needs, 82% of its rhenium needs, and 68% of its silver needs. And Pebble will provide, at least 50% of all of the replacement of those import numbers. I'd like to think that there's a clear value track to opportunity in Pebble. Currently, we're trading on a copper equivalent basis at about 0.43 cents per pound. So that's about 1/2 cent per pound. Comparable companies in the developer category are trading at 2.5 cents per pound. So that's a 5-fold opportunity increase in the share price. Gold only, we're trading at about $7 per ounce of contained gold, and developer average is about $100. Producer averages in those two categories are 12.9 cents or 13 cents per pound. That's a gap from 0.5 cent to 13 cents and up to $160 an ounce. In addition, if you take a look at NDM's share price and market cap compared to some M&A transactions over the past 4 or 5 years, there's anywhere from a 5 to 20-fold increase opportunity based on historical M&A opportunities in the last few years. The Pebble Limited Partnership that operates the permitting aspects and all of the work in Alaska is run by Chairman and CEO John Shively. John has a long history. There's a great team, a dream team for permitting up there. That's all I've got to say here today, and hope to engage with many more of you on one-to-one conversations. Thank you for your time.